back to Zylostar's weekly market update. Today we have Miss Sasha and Miss Nurhan who will be giving you a brief about the financial market and what's going to happen this week.
The gold market is reaching the highest price in the historic and the crypto market is consolidating. We are waiting for the bull run as soon as possible.
US inflation released lower than it's expected. At the same time, Donald Trump treated 200% tariffs in Canada. So let's see what he is planning.
All right, everybody, welcome back. My name is Samer Ruslan. I'm a technical analyst at Zylostar, and we are kicking off our market updates for the upcoming week. Starting off with NASDAQ. We can see that NASDAQ has actually slightly moved above the descending trend line of this downtrend on 2-hour time frame. And we need a confirmation to actually take it for technically granted that NASDAQ has started to move in a bullish sentiment. So we need a break for this resistance. Before it, we don't have a confirmation. And right now the price is at resistance itself. Right, so this is what's happening. We get a break above, so we wait for a retracement and we look to enter a trade on a bullish or a long trade, basically, long position. So that's about NASDAQ. Going to Bitcoin. Now, Bitcoin is making a lot of drama in the past 2 weeks. We can see price is volatilely consolidating, if that is even considered. Anyways, so it's finding a strong support at the levels of 75 to 80,000. And from here, it's moving up. So actually, there are too many factors on both sides, whether the bullish sides and the bearish sides. Speaking of the bearish one, we have about $820 million, 9,889 Bitcoins that has been moved, right? And some conspiracies say it was internal shifting, so it's not to really cause any trouble to Bitcoin, but that also caused the price to fall down previously. So about the bullish sentiment, we see that even due to that, at the end of it, the price is bullish, even after that shift. And also we have BlackRock investing about $25 million into Bitcoin once more. Yeah, so right now it's consolidating because all of what is happening on both sides, but overall we might see another retracement to that support, creating for us a triple bottom before we can see an upward continuation in movement. Right, now going to our Nifty50. Now Nifty50 is still following the same pattern as we've spoken about since the very first time we've spoken about Nifty50 anyways, and still moving out in that descending triangle 4-minute, and we're still looking for a retracement to the support of 21,800 before a continuation to test again the descending trend line of this descending triangle before a break down eventually and liquidation of the support of 21,800. So that will be it for the upcoming week.
Hello guys, let's check Zylostar strategies and we'll start with the gold market, go into the Euro-USD market. Gold market yesterday has broken resistance with the possibility of retracement, and it has reached to the high price, which is $3,005 before a retracement. And now what we are expecting a small retracement to our major fair value gap in the 4 hours or in the 2 hours, and our retracement to our breakout strategy point, which is a resistance to support level. This is our outlook for the gold market. Go into the Euro-USD market, and the Euro-USD market, after break of resistance points of the cup handle pattern, the Euro-USD has lost momentum and retracing again. And now what we are seeing last week is consolidating in the same price between like 1.08 200 and 1.09 300. And now what we are expecting the Euro-USD to go more lower. Why? Because it has a lot of liquidity in the downside, and we have this breakout resistance point. From here he can retrace it again. Thank you guys for watching. I'll see you next week.
Greeting everyone, hope you are doing great. This is Masoud Amidi and I'm Senior Fundamental Analyst at Xylos Head Office, which located in Dubai. Let's jump and analyze the financial markets regarding the fundamental and market sentiment. This week we got combination of economic indicators about inflation and employment sector in the United States. Let's go about it first with JOLTS, or better to say job opening numbers. It published little bit higher than expected, means the job vacancies or demand is still in good shape. But if we analyze this data more precisely, we can understand the previous number revised down to 7.51 million and hires held at 5.4 million, and total separation changed little at 5.3 million. The consumer price index for all urban consumer increased 0.2% in February after rising 0.5% in January. The index for shelter rose 0.3% in February, accounting for nearly half of the monthly all item increase. Despite the decrease in the gasoline index, the energy index rose 0.2% over the month, as the indices for electricity and natural gas also increased. All led the CPI to reach 2.8% for the first time since December, as you can see here on the screen. Also, on the other hand, PPI had the same scenario. It dropped to 3.2% from 3.7%. And for the core PPI, which means the final demand less energy, food and trade, it deducted to 3.3% annually basis. Now market participants gained more hope for the rate cut by the June of 2025, but it didn't help the markets, or better to say the equity market and crypto and indices, to push higher, because from the geopolitical side, Donald Trump threatened to put up to 200% tariffs on Canada and other countries, and it made the financial markets a little bit volatile. Let's have a look also at the Bank of Canada statement. Short-term inflation expectations are rising due to trade tensions and tariffs, which may slow economic growth and increase inflationary pressures. Consumer confidence is declining and uncertainty in the economic outlook is growing. Eventually, on Friday, Michigan consumer sentiment appeared lower than expected. Consumer sentiment slid another 11% this month, with declines seen consistently across all groups. Year ahead inflation expectations jumped up from 4.3% last month to 4.9% this month, the highest reading since November of 2022. Long-run inflation expectations surged from 3.5% in February to 3.9% in March. Let's jump into the upcoming week. So next week is a little bit more crowded than this week on the economic calendar, because we are going to have the different meetings by the different central banks all around the world, such as Federal Reserve from the United States, MPC, or better to say the Central Bank of England for the UK, and also we are going to have Bank of Japan on 19th of March, or better to say Wednesday. It's not going to stop here. We will have the retail sales and core retail sales at the beginning of the week on 17th of March for the United States, and also CPI numbers, which will be released exactly on 18th of March at 4:30 p.m. to UAE time. As I mentioned, our head office is located in Dubai. And eventually on Friday, we will have the retail sales number for the Canadian dollar. So just a moment, we will have also the corporate earnings for the next week. Nike, FedEx, and NRX is gonna release their earnings next week. Stay tuned with the financial markets.
Thank you for watching the video. Do not forget to like, share, comment and subscribe to our channel. Stay tuned for more such information.